What if you could beat Wall Street's top investors at their own game? What if the secret to finding winning stocks wasn't hidden in complex charts and technical analysis, but right there in your own shopping cart or during your daily commute to work? Welcome to Book Bites Guru, where we unlock financial wisdom from timeless investment books, one book at a time. In this series, we're diving deep into a modern classic, One Up on Wall Street, by the legendary investor Peter Lynch. Peter Lynch, born on January 19, 1944, is an American investor best known for managing the Fidelity Magellan Fund from May 1977 to May 1990, a remarkable 13-year period. During his tenure, he transformed the fund's assets under management from a mere $18 million to over $14 billion, achieving an outstanding annualized return of 29.2%. Lynch consistently outperformed the S&P 500 index in 11 out of those 13 years, making Magellan the best-performing mutual fund globally during that era. His secret? He believed that average investors have a massive advantage over the pros because of their everyday insights. Lynch's revolutionary idea is simple: invest in what you know. He argued that by paying attention to the products and services you encounter every day, you can discover incredible investment opportunities. These are the 10-baggers, stocks that can increase tenfold in value, long before they hit Wall Street's radar. He famously invested in Dunkin' Donuts after seeing long lines there. Lynch also categorized stocks into types like slow growers, stalwarts, fast growers, cyclicals, turnarounds, and asset plays, each with distinct characteristics for investors to understand. But how do you apply these principles? In the upcoming videos, we'll break down Lynch's key lessons, one by one, showing you how to do your homework and categorize stocks. We'll also explore how to develop the discipline to hold on for the long term. This isn't just for finance experts. It's for everyone who wants to build real, lasting wealth. Ready to get one up on Wall Street? Make sure you subscribe to Book Bites Guru and hit that notification bell so you don't miss a single lesson. Let's start this journey to financial freedom together. Welcome back to Book Bites Guru. You've spotted potential winners in your daily life, perhaps without even realizing it. Now, Peter Lynch, the legendary investor, teaches us how to turn those everyday observations into 10-baggers, stocks that can multiply their initial value 10 times or more. 10-baggers aren't typically found in flashy tech hype or overhyped trends. They're often overlooked companies with strong, enduring fundamentals. Lynch famously found these gems in everyday businesses, like the consistent growth of Dunkin' Donuts or the stable appeal of Hanes Apparel. These were stable growers, hidden in plain sight, often dismissed by Wall Street analysts focused on more glamorous sectors. The absolute key to identifying these potential 10-baggers, according to Lynch, is focusing relentlessly on earnings growth. It's crucial to ignore the short-term market noise and daily fluctuations that often distract investors. Instead, look for companies demonstrating consistent earnings increases over several quarters or years. Beyond earnings, examine the company's financial health. Specifically, look for low debt levels. A reasonable price-to-earnings ratio is also vital, indicating the stock isn't already overpriced relative to its earnings. Lynch advocated for what he called the 2-minute drill before investing in any company. First, can you explain the business simply and concisely to a fifth grader? If not, you likely don't understand it well enough. Second, what is its sustainable competitive edge? What makes it unique and difficult for competitors to replicate? Finally, always do your homework. Check balance sheets, income statements, and annual reports thoroughly. These documents provide the factual basis for your investment decisions, revealing the true health of the company. Pro tip: before you buy, always ask yourself, what's the story here? What's the narrative driving this company's growth? Understanding the underlying story helps you stay invested through market volatility and appreciate its long-term potential. Next time, we'll dive deeper into different stock types and the crucial role of patience in achieving significant investment returns. We'll explore how different business categories can offer unique opportunities for growth and how to align them with your investment goals. Subscribe to Book Bites Guru, like this video, and follow us for your continued path to financial freedom and investment success. Welcome back to Book Bites Guru. In our previous section, we introduced the game-changing philosophy of Peter Lynch. Here, we dive into his first and most famous lesson: invest in what you know. Lynch argued that you, as a consumer and professional, have a powerful edge. You encounter great companies long before they appear on Wall Street's radar, leveraging a unique consumer's perspective. That amazing new store in the mall, the software that transformed your workplace, or the car brand everyone is suddenly buying. These are your secret signals. Your personal knowledge and everyday experiences are invaluable. Why is this an advantage? Because professional fund managers are often restricted. They can't invest in small, emerging companies, or they have to follow rigid rules, limiting their flexibility. You don't have these constraints. You have the freedom to invest in a small, promising company and the patience to hold it as it grows into a giant, unburdened by short-term pressures. This flexibility allows individual investors to be nimbler, taking positions in smaller companies with high growth potential, often before they catch the eye of institutional investors. Here's your pro tip: start an investment diary. When you notice a product or company that impresses you, write it down. Ask yourself, why do I like this? This is the first step in identifying potential 10-baggers, stocks that increase tenfold or more. It's about understanding a company's business model and its story. In our next video, we'll teach you how to do the homework on these ideas, including understanding key metrics like the P/E ratio and PEG ratio. Subscribe to BookBytes Guru and hit the bell to keep building your financial freedom and unlock more insights into smart investing. Welcome back to BookBytes Guru. In our previous lessons, you've already learned essential skills like how to find great companies worth investing in and how to do thorough homework through diligent research and analysis. But remember, not all stocks are created equal or behave the same way. Today, we'll dive deeper into Peter Lynch's practical method for categorizing different types of stocks and uncover the most underrated yet powerful investment tool, the virtue of patience. Peter Lynch wisely sorted companies into specific categories such as stalwarts, fast growers, cyclicals, and turnarounds. Knowing exactly which category your stock belongs to will clearly tell you what kind of performance and risks to realistically expect from your investment. Ask yourself, are you holding a classic stalwart, one of those giant, rock-solid companies that reliably deliver steady, consistent returns year after year without much drama? Or do you own a dynamic, fast grower, a smaller, more aggressive company that's pushing boundaries and holds massive potential for explosive growth in the right conditions? Maybe it's a cyclical stock that closely follows broader economic trends, rising during booms and falling in recessions, much like an auto manufacturing line that speeds up or slows with consumer demand. Or perhaps it's a high-risk turnaround, a company that's currently struggling through tough times but is strategically positioned for a potential dramatic comeback if management executes well. Peter Lynch stresses that once you've carefully bought shares in a great company, the single hardest part of successful investing is summoning the discipline and patience to simply hold on for the long haul. During inevitable market downturns, resist the urge to panic and sell off your positions. Likewise, steer clear of the fool's errand known as trying to perfectly time the market with buy and sell predictions. Instead, your ongoing job as a smart investor is to periodically review and verify if the company's core fundamental story, its business model, competitive edge, and growth prospects, remains fully intact. If everything checks out positively, confidently hold on and let your investment compound and grow steadily over time. Here's a key pro tip straight from Peter Lynch. Before you pull the trigger on any purchase, take a moment to write down precisely what category it fits, whether stalwart, fast grower, cyclical, turnaround, or another type, which will sharpen your focus and clarify your long-term goals. In our exciting final video coming up next, we'll pull everything together by summarizing all of Peter Lynch's timeless wisdom from One Up on Wall Street and deliver the ultimate actionable takeaway for your investing journey. Don't miss it. To stay updated with more valuable lessons, please subscribe to the channel, give this video a thumbs up like, and follow BookBytes Guru across all your favorite social platforms. Welcome back to BookBytes Guru for our grand finale on Peter Lynch's timeless classic, One Up on Wall Street. Published in 1989, Peter Lynch managed Fidelity's Magellan Fund from 1977 to 1990, growing it from $18 million to $14 billion in assets, while delivering an annualized return of 29.2%, outperforming the S&P 500 in 11 out of 13 years. We've journeyed from spotting everyday winners using your consumer edge to mastering the art of disciplined patience. Now, let's bring it all together. Let's recap your complete investment toolkit from Peter Lynch. First, invest in what you know. Use your unique edge as a consumer, worker, or traveler to spot promising companies before Wall Street pros. For instance, Lynch bought Dunkin' Donuts after seeing long lines at the coffee shop you love, and Haynes after his wife purchased Legs pantyhose. Target firms with consistent earnings growth of 20 to 25% annually. Second, hunt for potential 10-baggers, stocks that can rise tenfold, by focusing on solid, consistent earnings growth rather than fleeting market hype, since a company's success is tied directly to its profits. Lynch's portfolio featured over 20 such winners, like Fannie Mae up 19 times from 1984 to 1989 and Taco Bell. Third, do your homework with the 2-minute drill. Assess the company's story, products, competition, sales and earnings growth, institutional ownership under 60%, insider buying, using the PEG ratio, PE divided by annual EPS growth, aiming for under 1.0, and check balance sheets for debt below 50% of equity. Finally, categorize stocks as slow growers like utilities with 2 to 4% growth and 5 to 7% dividends bought on dips, stalwarts like Coca-Cola at 10 to 12% growth for low downside, fast growers at 20 to 25% like 1980s Walmart, cyclicals such as airlines bought at cycle bottoms with PE under 10, turnarounds like Chrysler, or asset plays where assets exceed market cap. Practice patience by selling losers if fundamentals deteriorate, letting winners run like Philip Morris for 45 times gains, holding 20 to 30 stocks with no more than 10% in one, ignoring timing and tips for story consistency. This is the formula for getting one up on Wall Street. This series offered just a glimpse into Peter Lynch's profound wisdom from his Magellan Fund success, growing $18 million to $14 billion with 29.2% returns. To truly master these concepts, discover more invaluable insights on 10-baggers, stock categories, and patience. We can't recommend this enough. Buy and read One Up on Wall Street. It's a small investment for a lifetime of financial knowledge, empowering you toward independence. Thank you for joining us on this transformative journey with Book Bites Guru through Peter Lynch's One Up on Wall Street. If you're ready to build lasting wealth and achieve financial freedom using strategies like investing in what you know, hunting 10-baggers, and practicing patience, take action. Subscribe to Book Bites Guru, hit the like button, and follow for more deep dives into the world's best financial books like this one. We believe in empowering you with proven knowledge from legends like Lynch, whose Magellan Fund outperformed massively. Your journey to getting one up on Wall Street starts now.